Today, we are going to be discussing some stocks which are relatively unknown / less known, and they are from a variety of industries: pharma, engineering, research and development, textiles, outsourcing, finance. Now, before we get into these stocks, let me share the reason why I decided to study them. There is a thing called alternate investment fund, and some of these funds are highly bullish on these stocks. There are many categories of AIFs, and the category 3 AIF long only funds are very similar to the mutual funds, but they are meant only for the HNIs, and the minimum investment required is 1 CR. We all know that the rich keep getting richer. But why can't we retail investors study how exactly they are getting richer and which stocks they are buying? We are doing that today. This channel intends to spread knowledge among retail investors for free. But the thing is, knowledge is never free. You will have to pay attention. And for that reason, the names of these stocks will be hidden somewhere in the video. To know them, you will have to pay a lot of attention and get the knowledge of the businesses first. After all, this is an education video and not a recommendation video. So let's begin. Namaste and welcome to Retail Investing. Stock number 1 is from the pharmaceutical sector, and before we get into this stock, let's understand one thing about the pharma sector. So what happened after the COVID crash of March 2020 was that pharma companies gave massive returns for the next 18 months. You see, the market likes to have these stories from time to time, and pharma was a great story during the pandemic. So here you can see the returns of some of the pharma companies in the post-COVID bull run until 2021. Divi's Lab 174%, Jubilant Pharma 296%, Aarti Drugs 700%, and this company 1000%, and it did not even crash in 2020. After that stellar return in a very short period of time, most of the pharma stocks corrected and entered a very long phase of consolidation. And today many of them are trading at attractive valuations. So here is the chart. The current price is hovering around 5100 rupees. In November there was a heavy buying, as you can see, and these indicate institutional buying. This is the 200-day moving average, and the current price is way above the 200-day moving average. So this company produces APIs, which is short for active pharmaceutical ingredients, and specialty medicines. Now, specialty medicines are very expensive compared to other medicines, and they are used to treat rare diseases like multiple sclerosis, rheumatoid arthritis, etc. The specialty medicine sector is expected to grow at a CAGR of 37% in between 2023 and 2027. That's a huge opportunity for this company. So here is the financial overview. A market cap of 6,500 crore rupees. That is a pretty small company. The difference between the 52-week high and the 52-week low is huge. A profit of 325%. And still, the price to earnings multiple is below the industry average. Also, the PEG ratio is very good. The return on capital employed and the return on equity are very impressive. The debt to equity ratio is 0.09, which means the company has very low debt. So here is the profit and loss statement. Just have a look at the operating profit margins, 28%. That is very high. And the earnings per share growth is very impressive, from rupees 2.88 in 2012 to 207.49 today. So the company's profits have compounded at 68% in the last 5 years. And in the last 3 years, the profits have compounded at 117%. In fact, if you take the last 3 years figures, profits have compounded way faster than sales. That's operating leverage. Now, when it comes to the global API supply, India is becoming a preferred supplier from being a volume producer. So if we talk about growth, India's API supply is expected to grow 3x in the next 3 years. And also a lot of capex are expected. So this is a good opportunity for investors to make money in this sector. Stock number 2 is from the ERD sector, which is short for engineering, research and development. And the outlook for this sector is very positive even during the current global economic slowdown. A growth of 10% CAGR is expected until 2026. So here is the chart. As you can see, currently the stock is trading at around 2200 rupees. Since January, the stock has almost tripled, and now it's far away from the 200-day moving average. And the volumes are quite high as well. Now, this company's services are required in many industries: mining and natural resources, where the company serves in safety critical areas and autonomous mining; energy, industrial and plant engineering; the utility sector, where the company provides services in electricity grid modernization; the communication sector, where the company works in optical fiber and 5G; aerospace and defense. So here is the financial overview. The market cap is roughly 24,000 crore rupees. The 52-week low is 765 and the 50 52-week high is 2248. So the stock gave 3x returns in between the 52-week low and the 52-week high. And the price to earnings multiple is still below the industry average. The return on capital employed and the return on equity are well above average. Very low debt with a debt to equity ratio of 0.26. So here is the profit and loss statement. If you look at the sales growth from 2012 to 2023, it's not that impressive. A CAGR of only 12%. But recently the sales have been growing very fast. From March 2022, the sales have become 1.5 times and the earnings per share have followed the same trend. So this sudden growth is the reason why this stock is on my list. The demand for high-tech solutions is growing fast across all industries. So here is the overview of the cash flows. Company has been generating positive cash flows from operations and the cash flows are actually growing. One small apparent red flag is the shareholding. As you can see, the promoters hold only 23% stake in the company. In fact, in the September 2023 quarter, the promoters have sold their stake again. But the good thing is that all the shares which were pledged by the promoters have been released. Research and development is essential for the kind of services that this company provides. And research and development requires a lot of money. When interest rates are high, it becomes expensive to borrow money. But historically, the engineering research and development companies have increased their spendings during recessions and economic slowdowns. And companies which can generate enough cash flows from their operations do not need to borrow much. And this company's cash flows are just fine. The stock has recently gained too much, so there could be corrections due to profit booking. Now there is one risk factor that should be considered. There is a trade conflict going on between China and USA. And if this trade conflict results into some kind of military conflict in Taiwan, the semiconductor industry will be doomed. And so will the operations of this company. If you have made it this far in this video, it means you have paid a lot of attention. So it is time to know the names of these stocks. So stock number 3 is from the technical textile sector. And here is the chart. Currently the stock is trading at around 3300 rupees. It has been a quite volatile stock. And that is obvious because the volumes are quite low. The 200-day moving average is at 3000 levels. So the current market price is a little above the 200-day moving average. So what does the company do? Well, they make nets and they also make the technical fibers that is used to make those nets. And nets have applications in more industries than you might think. Aquaculture, sports, fishing, geosynthetics, coated fabrics, material handling, safety systems. So here is the financial overview. The market cap is just under 7,000 crore rupees, which makes it a pretty small company. The 52-week high is 3,479 rupees and the 52-week low is 2,587 rupees. And the current market price is very close to its 52-week high. The company's price to earnings multiple is just above the industry average. The return on capital employed and the return on equity are quite good. The company has a very low debt with a debt to equity ratio of only 0.1. So here is the profit and loss statement. As you can see, the sales growth is not that impressive, but the operating margins are quite good. The cash flow from operations has always been positive, which is definitely a good sign. Now let me try to explain the importance of the products and services that this company provides. So this photo is from a place in Odisha. As you can see, a railway track is going through some rocky hills/plateaus. In such scenarios, rockfall protection is required to prevent rocks from falling on the track and jamming it, which could even cause accidents. Now this is a photo from the Ladakh region, and in that region, highways get blocked by avalanches. This company's nets help prevent the blockage of highways by avalanches. Now going through the financials, I did not see any impressive sales growth so far. But the future can be different. You see, India's infrastructure story has just begun, and the services that this company provides find applications in mining, highways, and aquaculture. As these industries grow, the sales should improve. Stock number 4 is from the industry of business process management and data analytics. So here is the chart. As you can see, it is currently trading at around 2,500 rupees. And since August, there has been a big run up. The 200-day moving average is at 1,700 levels. So the company provides services in segments like customer management, data analytics, and derivative trading, in which they do settlements and clearing and also KYC. So as you can see, they have offices located all across North America, Europe, and Asia Pacific. So here is the financial overview. The market cap is roughly 12,500 crore rupees, which makes it small enough to have a lot of growth potential. So there is a big difference between the 52-week high and the 52-week low, and the stock has more than doubled. And even after the big run-up, the price to earnings multiple is way below the industry average. The return on capital employed and the return on equity are both very impressive. The company has a very low debt with a debt to equity ratio of only 0.11. So here is the profit and loss statement. The sales growth is okay, good, but not great. But the operating margins are quite impressive. So this is the cash flow statement. The company has been consistently generating positive cash flows from operations. So the company has been investing into research and development and technology absorption. They use low code/no code for providing their services. These things have a positive impact on the operating margins. The management's outlook for financial year 2024 is quite positive. They even have plans to diversify into other sectors like pharma. As of now, 91% of the company's revenues come from North America and Europe. Some diversification is needed there as well. Stock number 5 is from the pharma sector. So here is the chart. The stock is currently trading just under 400 rupees. The all-time high was around 720 in August 2021. So right now it's almost a 50% correction from its all-time high. The 200-day moving average is at 350 rupees and the current price is quite close to it. So the company makes APIs and they're leading globally in the manufacturing of certain APIs. For example, oncology drugs, which are used for treatment of tumors. Recently, this company became the first one to indigenously develop CAR T-cell therapy. If you are interested, you can research what CAR T-cell therapy is and how it can be used against cancer. So here is the financial overview. The market cap is approximately 21,000 crore rupees. The 52-week low is 279 and the 52-week high is 418. So that's a lot of gain from the 52-week low to the 52-week high. The price to earnings multiple is almost double the industry average. The return on capital employed and the return on equity are both very good. The company's debt is quite low with a debt to equity ratio of 0.45. So here's the profit and loss statement. So from 2012 to 2023, the sales have gone up almost 13 times. And while increasing their sales, they were successful at maintaining margins, which is great for any business. Here is the cash flow statement. And as you can see, there has been a healthy growth in cash flows from operations. After the COVID crash of 2020, the cash flows tripled to 1,500 crore rupees in just 1 year, and it has still not touched 1,500 levels. As the global economic slowdown subsides, the Indian IT sector and the pharma sector are expected to receive a lot of investments, and they should give good returns to the investors. Stock number 6 and the last stock of this video is from the banking sector, and it is a state public sector entity. So here is the chart. The stock is currently trading at around 130 rupees. In the last 12 months, the stock has given a pretty big run up. The 200-day moving average is just under 80 rupees, and the volumes are quite high. The bank has branches in 22 states and union territories, but most of the branches are located in Jammu and Kashmir. So this bank has been financing infrastructure projects and government schemes in Jammu and Kashmir and Ladakh. And those places are seeing a lot of infrastructure developments recently. So here's the financial overview. The market cap is just 13,000 crore rupees, which makes it a small bank. The 52-week low is 44 and the 52-week high is 140. So the stock has gone up 3x from its 52-week low to its 52-week high. The price to book value is quite low at 1.33, and the price to book value does matter in case of banks. The return on equity is 13.1%, which is good enough. So here is the profit and loss statement. As you can see, the last 5 years profit CAGR is 42%, and for the last 3 years it has compounded at 44%. So that is some really impressive profit growth. So as you can see from this chart is that the stock price was above 180 rupees in 2014, and then it massively crashed, and there was no recovery until 2021. Well, why did that happen? Well, there was a fraud case of a loan of 1100 crore rupees in 2014, but that case is now closed. Now recently there was another news regarding the Jammu and Kashmir Bank. ED, the Enforcement Directorate, conducted raids on the premises of the Jammu and Kashmir Bank in a 250 crore rupees money laundering case. But it was later clarified that those raids were conducted on the premises of the Jammu and Kashmir State Cooperative Bank and not the Jammu and Kashmir Bank. This confusion resulted in corrections in the stock price of the Jammu and Kashmir Bank. So these were the 6 stocks I wanted to share, and please let me know in the comment section which ones do you like the most. And don't make any investment decision in a hurry. You can put these stocks in your watch list, do some of your own research, and then make a decision. If you got any clarity on these 6 businesses, please like and share. And if you don't want to miss future videos, just click on subscribe. Now before I end this video, let me refer to a concept I mentioned in my previous video which was on Paytm. It was the concept of the network effect. The network effect says that the value of a company increases as more and more people join it. Now this joining refers to joining a platform as users, not as distributors. So please do not get the wrong idea. So we are going to meet in the next video, and until then, have a nice time. Jai Hind.